interest on
Hello
loans have been
guys.
reduced.
Do you know that the cost of borrowing or interest on loans has been reduced? My name is Dr. Victoria Brentasi, and my purpose is to bring you information that's going to enhance your financial well-being. So in this December, Bank of Ghana pegged Ghana reference rate at 15.90%. And that is a reduction from 17.93% as of November. And if you don't know the meaning of Ghana reference rate is a benchmark that banks base on to determine the interest they are going to charge on loans. So if it reduces, then all other things being held constant, banks should also reduce the interest they are charging on the loans they are giving us. Not long ago, policy rate was reduced from 21.50% to 18%. And I knew from then that Ghana reference rate also need to be reduced, and then it has been reduced. Now let's know what rate should we expect on our loans, the loans we go for. What rate should we expect on it? Now, to determine interest on a loan, it's being influenced by the Ghana reference rate from Bank of Ghana plus risk factor. So your bank has to determine a risk factor, and risk factor is between 2 to 5%. 2 to 5%, determined on a level of risk. So let me see how best I can explain this. So if you are a salary worker, you are taking your salary through their bank, okay, and meaning you are taking salary every month. We can say your risk level, the possibility that you might not pay your loan as indicated is very low. So probably you'll be giving 2 to 2% will be added to the 15.90%, okay, to determine the interest you should pay on your loans. But however, if you are maybe a trader, a small business owner, SMU owner, mostly banks view you as a high risky customer, okay, so they are going to give you higher risk factor, so maybe between 4 to 5. So that one will be added to the Ghana reference rate to determine the interest you are going to pay on the loan. So I'm not saying all owners, traders have high risk factor, because some have a very good credit score, so they are going to probably receive low or even lower than what salary workers are receiving. So if putting all this together, if Ghana reference rate is 15.90%, and risk factor between 2 to 5%, then loan interest on loans shouldn't be more than 20%. So it should be between 18% to 20%. Okay, so meaning that if you're a salary worker, you should be, if street you are paying by this, then they should be taking 18% on your loans that you are taking. Okay, then those that perceived to be risky, the highest should be 20%. So anything above 20% is too expensive. It's too expensive. You should also know that it came recently, so we don't know whether the banks have implemented, because should be implemented from up there. So you can, if you are going for it, you can wait a bit and see. Another question this threw to me, I was just thinking about it. That was like, if Ghana reference rate is going to fluctuate every month, then should banks opt for fluctuating rate on interest on loans? Sorry, fluctuating interest rate on loans. Okay, so based on what will happen, you pay the interest. But then I think to myself, a risk averse person like me would always go for fixed rate. So they'll be deducting a specific amount from my salary every month than it's fluctuating. Okay, so that I'll be sure, I need this surety, certainty that this amount will be coming out of my salary to me every month. So you see, it's prudent based on where you are coming from. From the bank's perspective, probably should be fluctuating, because if it becomes high and they give you fixed rates, they are going to suffer. Okay, if it is low and they give you fixed rate, you the customer is going to suffer. But I will still go for fixed rate. For me, I will still prefer fixed rate. Thank you.